All right, Matt the Mortgage Guy here. Want to make a quick video, 3 home buying tips for first-time buyers. Even if you're not a first-time buyer, if you're a second or third-time buyer, this video should be informative. It should be helpful. I want to help folks out with 3 simple tips. So I'm going to keep it super simple. 3 tips that I think are important that can be helpful. Before I do that, consider subscribing to the channel. 96% of these views that I'm getting on these videos are from non-subscribers. So I'm not sure what's going on. If you came for mortgage content, you got it. Go ahead and subscribe. More good mortgage content is coming. So enough with that. The first tip is talk to a pro, and I'm going to elaborate. Talk to a pro that is knowledgeable and busy. And the reason why you want to talk to a pro who's knowledgeable and busy, because somebody who's busy isn't desperate for business. I'm going to tread lightly on how I say this, but I see time and time again the thirstiest of the thirsty blasting across social media, whether that's a realtor or it's a lender. They're just as thirsty, both of them. Don't worry about your credit. I can get you into a house. Or don't worry about a down payment. We can help you out. This screams thirsty. This screams, I'm not really concerned with how qualified or ready you are. I just want to get somebody else to the finish line so I can earn a commission. Because I'll tell you with absolute certainty, most folks that are using down payment assistance or are getting into a loan with challenged credit are setting themselves up for long-term failure. And I just don't want, I'm not that desperate for a deal that I need to push this person to buy right now. If we put together a plan, 3 months, 6 months, 12 months, 18 months, 2 years, houses are still gonna be out there, houses are still gonna be available, and the difference in the quality of the loan you get when you put down your own down payment, when your credit score is up to 640 or up to 680 versus 595 or 603, it's huge. And we don't want to set you up with a payday loan. You know, there's people with bad credit getting car loans at 29%. That is a recipe for disaster. It's bad for your finances. Same thing with housing, but it's on a bigger scale. You don't want to do that if you're not prepared. So talk to a pro that's going to shoot straight with you. Because when you call me, I promise you, I may not give you the answer you want to hear, but I'm going to give you the answer that truly serves you. Because that's what we're in the business of doing. And there's plenty of loan officers like me across the US. They're gonna shoot straight. They're gonna give you honest answers. You just have to avoid the thirsty ones. So maybe you have to talk to a couple, or maybe you can just sniff it out like I can and you just realize some of the verbiage about, don't worry about this, don't worry about this, I got you. I'm gonna get you in a home, come hell or high water. Not the route you wanna take. So number 2 is have a plan. And inside of this plan is get pre-approved. I beat on that drum so much that I don't want to really harp on getting pre-approved, but that is part of how you put your plan together. Even if you're 6 months out or 12 months out, I tell people a pre-approval doesn't cost you anything, so you might as well do it. And with that pre-approval, I talk to plenty of people where even if they're a little ways out, let's do it. Let's take you through the process. Let's show you what this price point and this price point are with 3% down and 5% down, so that you know, even if you're not buying right now, you can look to the future and say, hey, I know I want to buy between 400 and 450. I know I want to put down 3% to 5%. I can show you those numbers so you know, okay, here's the number I need to save towards. And like you'll get from me advice-wise, let's shoot for something that's $10,000 or $15,000 more than what you're going to need to close. Because inevitably repairs are going to come up and you don't want to spend every last dime you have getting into a house. You want to have reserves for 1, if something goes wrong, for 2, if you just want to buy couches and a new throw rug or whatever the heck you're going to put in your new house, you're going to want some money in the bank above and beyond what you're putting down. If you're putting every last dime into a down payment, you're probably in a position where you want to wait a little bit, and that's just the honest truth. People that are truly looking to serve you are gonna tell you that, versus let's work it out and let's have you borrow $2,000 here and $4,000 there and 401k withdrawal and all this other stuff to get your down payment. Usually not advised. I mean, there are some circumstances where, hey, let's borrow from a 401k and let's get you into this house. You've got a stable job, you've got a bunch of stuff going for you and great credit, and so I'm not afraid for you. But in general, the better financial position you're in when you enter into homeownership, the better chance you have of owning this home 20 years from now. versus something going off the tracks and then you get in trouble. So on to number 3. Once you've got pre-approved, you've got a plan, you've talked to a pro that's really giving you good advice, and you're ready to roll, connect with a quality realtor. And in 2021, I can tell you that this seems to get more and more important. In a market like we're in now, having a quality real estate agent who knows the market, who's not desperate for biz like I talked about earlier, is absolutely vital. Because one, they're gonna show you houses. They're gonna talk to you about what your wants and needs are. They're not gonna force you into a house, but once you find the house you want, the quality real estate professionals that probably are the top 5%, that probably make up 90+% of the transactions, know exactly what they need to put in the offer, the questions they need to ask when they call the list side. All these things that, to be quite honest, the realtors that do 3, 5, 7 deals a year, they just don't have enough experience to know what to ask, how to put together an offer. And in the newer agent's defense, or an agent that does less business, if they're in office with great mentorship, with great people around them, part of a good team that's got education as part of their team structure, maybe they don't do a lot of transactions, but they're knowledgeable because they have a bunch of great people around them. So I'll give them that. But who you work with is very, very important. And I know that in today's market, it's more important than ever. People, for whatever reason, think that, their cousin or their neighbor or their sister or their sister-in-law might be who they want to use for real estate. And yeah, they've got a real estate license. Having a real estate license and being a quality real estate agent is light years away from each other. I can tell you that. I have dealt with the best of the best, and I've dealt with the holy guacamole. You are representing someone on the biggest transaction of their life, and you can't even spell residential purchase agreement. Sorry, I had to say it. So that's that. Talk to a pro, have a plan, get pre-approved, connect with a quality realtor. That's a recipe for success. There's probably 15 or 20 tips. Those are 3 important ones that hopefully helped you out. If you've got any questions at all, please feel free to reach out. No matter where you're at in the country, email Matt, M-A-T-T, at mattthemortgageguy.com. I'll connect you with a great broker if you're not in California. If you're in California, I'm happy to help answer any questions. I serve all of California and have done business from the tippity top of the state all the way to the border. So with that, thanks for watching. I appreciate you. Talk to you soon.